Welcome to Investors Insight. For today's topic is shaking up the Fed. A lot going on this week, a lot of important information we want to cover. Before I talk about an important indicator we look at for sustainable rallies, and before Ty gives a really important update on oil, Trey, I want you to talk about the Fed. Again, the topic of today is shaking up the Fed. A lot going on at the Fed. We feel like all the news coming out of the Middle East has kind of drowned out the importance of a big decision at the Federal Reserve. Talk about that.
Yeah, thanks, Bobby. So a couple of news items coming out of the Federal Reserve this week. One is the Federal Open Market Committee is meeting. Normally a high news event. They're meeting Tuesday and Wednesday, and will announce a policy decision on Wednesday on whether or not they're going to cut rates, leave them the same, or raise rates. Most market participants expect no decision. But as always, the most important part of their decision is the press conference after, where reporters get to ask the Fed chairman about why the decision was made and maybe project out to future decisions. But this, what makes this meeting even more impactful is this now is likely going to be Jerome Powell's last press conference and meeting as chairman, because it was announced Senator Tom Tillis from North Carolina, who up till now has been holding up the confirmation of Kevin Warsh, said that he will allow the confirmation to move forward. And the Senate is going to vote on Wednesday. Senate Banking Committee is going to vote on Wednesday, the same day that the Fed is meeting and announcing their decision. The Senate's going to meet to probably push forward the confirmation of Kevin Warsh to replace Jerome Powell at the office. So this will be Jerome Powell's last meeting as the Fed. A lot of questions will likely center around whether or not Jerome Powell plans to retire from the Fed, because just because you're not chairman doesn't mean you don't remain on the board. Most chairmen in the past, once they leave the chairman seat, they also step down from the Fed altogether. But they don't have to. Jerome Powell, so he could step down from chairman. Kevin Warsh becomes the new chairman, but Jerome Powell remains his seat and a voting member. So that's an interesting. It will be kind of an awkward relationship there. So that's very important. There's going to be a lot of questions about that, and that'll kind of dictate where interest rate policy goes forward. Jerome Powell won't have as much sway over where it's going forward, but interest rate expectations of lower rates have come down. Most people think rates are going to stay flat throughout the year, and with this shakeup, we now get to hear from Kevin Warsh on what his policy is, where he thinks, and that'll start immediately, even though he's not in the chair yet, because he's now the presumptive nominee and will be in the chair before the next meeting. So, for the time being, we kind of have two Fed chairmen, both speaking on policy, and so that's going to be some confusion, a lot of uncertainty. But we'll see how markets react. And we're going to watch closely not just what the chairman says, but how the rates react afterwards. As we always say, we watch the 10-year Treasury to see what is said really means going forward.
Yeah, we talk about all the time the importance of corporate earnings and corporate profit margins being one of the key drivers of the market, but also the Federal Reserve. The decisions coming out of the Federal Reserve are kind of a 1B of importance for market growth. And so thanks, Trey. That's really important information. And then last week, our vlog topic was, will the rally hold? And we've had some good engagement and questions from viewers about what we look at to see if a rally is sustainable. And one indicator we look at is called the advanced decline line seen in this chart. The advanced decline line measures participation rather than price, and it is less impacted by the heavy weighting of mega cap stocks in the S&P 500. So a rising advanced decline line reflects healthy market breadth as advancing stocks outnumber decliners, while a falling advanced decline line signals weakening participation across the index. And you can see in this chart, going back 3 years, that the advanced decline line has been a reliable indicator in looking at previous market rallies. More recently, the rebound from the March 30th low has been driven by broad participation, with the majority of stocks rebounding from oversold conditions. And the breakout in new highs in the advanced decline line provides bullish confirmation of improving market structure and supports the case for a more durable rally. So great news on the advanced decline line, which is one of the many technical indicators we look at. And then Ty, I filled up my tank of gas this weekend, higher than I'd like it to be. Talk about oil and how it has acted post geopolitical events.
Obviously oil in the news. We are still working through the conflict with Iran, of course, and hoping for good updates on that front. But that kind of makes oil front and center for everybody, and we see it, as you alluded to, in our everyday lives. And so, at first glance, we always think of these geopolitical events, especially happening in the Middle East, as inflationary. Oil really rises. We see that spike, and then we kind of, maybe gradually draw down. But we don't think about that drawdown over time. We think about that initial spike, just human nature. What's interesting in this chart that our research partner Strategas put out is that 250 days before the geopolitical event, you can see the geopolitical event on the left. 250 days prior to the event, you see that the price of oil kind of directionally usually tells you where you're going. There's usually something that the market knows before we know. And then you have 65 days before the event. Then you have the day of the event column, and then 65 days after and 250 days after. So the most interesting point here is that 65 days after a geopolitical event, oil on average is actually down 5% after that event. And then the median, which kind of takes out some of these big results that the average includes, it reports about the same, down 5%. And then 250 days after these geopolitical events, on average, oil is down 3%, and the median is down about 10%. So these aren't things that usually last a while. Usually we do see that pullback of oil prices after, the day of the event. And of course, that's something that we'll be keeping our eye on to see if there's another, day that we have to keep in mind. But as you can see in the chart, quite a few events since 2022 to give you some direction here as we're moving forward with oil prices. So hopefully they're coming down.
Yeah, that'd be great to see. So we've covered it. Shaking up at the Fed. The Fed matters. We like what we've seen from this rally in terms of technical indicators. And Ty just covered it. We want to see oil go down a little bit. It impacts the economy. So if you have any questions on anything we've discussed today, call us, email us. We love to hear from you. We hope you have a great week. Thanks.